Hey everyone, welcome to the Value Add, where we talk about everything related to alternate investing. Starting a company is not easy. It takes a lot of effort. It takes time, dedication, persistence, constantly going through failures and iterating. There are a lot of challenges. Here are some insights into the challenges faced by some of the founders that we interviewed on our podcast while they were starting their alternate investment platforms. Welcome to Value Add, your edge in building wealth.
The due diligence started to become very challenging until we recently expanded our due diligence team. So, combing through the deals, finding the good deals, making sure we're doing a thorough job. I think we've solved that challenge. Another challenge in this business, because we do deal with securities and investments, we're constantly dealing with compliance, and that's pretty easy. What's not easy is the unpredictability of it. There's always somebody talking about legislative changes that may or may not impact our business model, whether it's regulation D or regulation crowdfunding, or we were in opportunity zone business for a while. And there's those unknowns that are always hard to deal with from a legislative standpoint. When you're a small business, they disproportionately impact you than when you're an investment bank and you've got a room full of compliance folks and attorneys working for you.
Honeybricks is an online platform that connects people wanting to invest in high quality commercial real estate with real estate companies that are looking for capital for their projects and want a new way to raise and manage that capital. The overarching mission of the company is to unlock the potential of real estate. So there's things I mentioned about being an incredible asset class and also a great vehicle for compounding wealth. It's how do we give more people that opportunity? And commercial real estate really has two challenges. Like one is education, like understanding how these things work. The other one is actually access. Predominantly, it's not readily accessible. It's very much an alternate investment for a lot of people. The goal is how do we bring those factors together to obviously unlock the potential of that equation.
The biggest thing about starting a new business is that there's no structure, right? You have to build all the structure. I think that the notorious hard work of corporate law certainly prepared me for what you need to do to make a startup successful, especially as you're scrapping through in those early days and trying to figure out what is this business? How do we make it? How do we deliver something that's valuable to your customer? I think it sounds maybe like a trite to say, but it's an incredible people-driven thing, right? Every person who joins can make a big difference in your business and how it grows. I feel really honored by the people who have joined the team and the way we've grown and the way we've been able to bring on experts, folks who were in the real estate industry long before I was, who are now part of this team and helping to kind of build our internal capacity.
The most challenging piece to us as a business and our consumers is mortgage rate uncertainty. That's where the entire sort of investing world freezes to wait out the uncertainty. We have certainty now. We have certainty that we're going to be in a higher interest rate environment. That's better. Obviously, lower rates are probably generally better for us because our hurdle is lower and therefore the scope of the homes that we can go after is much higher. But uncertainty is the worst one. For folks that buy a home prior to higher interest rates, it's actually generally favorable in the sense that the higher the interest rate is, like housing is a fundamental utility. Yep. So if you buy a home with the purpose of renting, increased interest rates means that there's probably higher demand for rentals because folks can't or do not want to buy a house given the mortgage rates. So there's a lot of different factors, I'd say, but there's one takeaway. Uncertainty is bad for business.
There are challenges all the time. Fundraising, whenever that comes around, that's always a challenging process. I remember being exceptionally nervous in my first venture conversation. It's never easy. One thing that I'm trying to get better with is, you have ups and downs, but trying to moderate those ups and downs between 4s and 6s as opposed to 2s and 8s, which can happen sometimes.
I'd say our biggest difficulty to launch was the regulatory side of things. The blessing that we've had was that when we've started this, we knew nothing about this world. And because we were like babies within the financial space, we've decided to do it. We're talking about a business that incorporates a company for every asset worth 100,000 euro that is bought. So we have currently 12 companies that we've supported to incorporate. We don't direct them, but we're there, Then the Convi Group doesn't have a very simple legal structure either. On top of that, it comes with the regulatory monitoring of multiple licenses. The biggest learning we've had out of this part was that we needed upfront capital. So we've put in a lot of our personal funds to pay lawyers in before we've managed to raise the first investment into the company, which me as a ex-software engineer was very difficult, that we've had to deal with all these external parties that we couldn't control and would cost a lot of money. So we've adapted to that. We've worked now with people from very different industries. And luckily, as part of this journey, I've learned a lot about incorporating companies. I find it quite interesting.
I would say in our case, growing has been a challenge, partly because investor education was not there, right? So this idea that we're talking about that now seems to be on the tip of many people's tongues, that idea of alternatives. This was not there 7, 8 years ago. This has really got on in the past 2 years, maybe 3. So investor education, I think, has been a very big hurdle where people did not know what this means and they still don't. So I am a registered representative of a broker-dealer. There are certain regulations that are helpful. So for example, suitability. There's something called suitability. Every broker-dealer kind of checks the suitability of their client. I think that's so important because you really want to make sure, at least try to make sure that the client knows what they're doing, what they're about. But yes, the challenge was, I feel that people didn't have education about how to integrate this into their portfolio, how will reporting work. Even today, we are working those challenges out. So I think I would say that the greatest challenge to growth was this. Then there are some things that I would say held back by my own kind of lack of information. So for example, now we have an office in India, and for so many years, I've held off having an office there because I just wasn't sure, even though I am Indian stock. Despite that, I was very uncertain about the quality of employees I would find there. I am so delighted because part of it is times have changed. They're quite fearless. I love it. So I think it's been a combination of people not understanding what we are doing and us also not making maybe sufficient effort to get out there and in front of people. Those, I would say, are the biggest challenges.
And that's today's value add. If you like today's video, hit the like and subscribe button below. For long-form written content, subscribe to my Substack. Otherwise, follow me on Twitter. See you there.